everyone. Today we are going to be talking about this Morgan Stanley report regarding can sentiment tail risk create a buying opportunity for Tesla. The stock rating right now is an overweight, which means it's a really good stock to buy. The industry view in line. The price target is 330. Right now of previous closing it was 195.97. Elon Musk's ownership of Twitter could affect consumer sentiment regarding Tesla. Any resulting weakness in Tesla shares could create an opportunity for investors. Tesla shares are currently in the throes of bearish sentiment momentum. Investors appear increasingly concerned over the potential for effects on consumer sentiment that could impact Tesla's business near term. Controversy creates uncertainty. In Morgan Stanley's opinion, one of the main drivers of Tesla shares to Terra Cap status in the recent years was the ability for investors to confidently model the economic outlook for the company's core EV and energy storage business, supported by a favorable economic backdrop. In recent weeks, this confidence has been tested, and we believe will continue to be tested through year-end. While it is not possible to quantify any potential impact on Tesla shares, we notice that the risk is clearly top of mind from our discussions across a range of investors. In what ways could sentiment on this topic materialize to Tesla? Consumer sentiment demand. There could be some customers that do not wish to be associated with controversy. Commercial partnerships. While Tesla is a highly vertically integrated company, it remains reluctant on a host of commercial partnerships, both upstream and downstream, that do not want to be associated with certain levels of controversy. Government relationships and support. Tesla's industrialization of renewable ecosystems and onshore battery developments requires close cooperation with sovereign entities. Investor sentiment and capital markets participation. While Tesla is largely self-funding today, to achieve that growth implied on its current $600 billion market capitalization will require a continued strong relationship with the investment community. We see a window of opportunity for new Tesla investors. Potential Tesla sentiment concerns and decelerating EV demand, particularly in China, could see Tesla test our 150 bear case before year-end. This was approximately the price Tesla traded when it was added to the S&P 500 index. Our team in China has commented on the recent significant price cuts in the market. We could prepare for price cuts to follow in Europe as Giga Berlin begins to surprise production of 5K units per week. And we could expect US cut prices to be initiated sometime in first quarter of 23. At our 150 bear case price, Tesla shares could trade at approximately 125 times EBITDA and 23 times PE on a 2025 forecast, which we see as an excellent value for a self-funded 20 to 30% top-line grower. So, things to highlight and to take away. First of all, the price target 330. We have talked about Ron Barron and Gary Black's target of 2030 to hit about 4.5 trillion, which is around $1,260 a share. Cathie Wood has a price target of around $7,000 a share in 2030. But that price target does have the robotaxi, the full self-driving, along with the EVs in it, while Ron Barron and Gary Black only use like a conservative estimate of only having EVs, even if any of their other businesses don't take off. And I do think Morgan Stanley's price target is within that range of like Gary Black and Ron Barron. It's a very like conservative case. 150 bear case price is very interesting. I personally didn't think it would go that low, but honestly it could be the case. I know a lot of people on YouTube and Twitter are like, looking into Tesla and is it like a good company right now in the short term, because Elon Musk is so busy with Twitter and has been actively selling Tesla. Tesla has nearly sold $4 billion worth of Tesla since this Twitter deal has closed, and Elon Musk recently said in an interview that he believes that the value of Tesla is immense, but he needed to sell it to save Twitter. And I do believe that at least in the short term, Elon Musk, as you see right now, is heavily on Twitter, and I hope advertisers don't leave it and they can figure out a space where Twitter can make money and then he can start focusing on Tesla again. But in the short term, this is an amazing buying opportunity for Tesla, like Morgan Stanley said. So I hope you find this insightful. This Morgan Stanley price target, it does align with a lot of the recent price targets that we have been seeing on Twitter and just online in general for Ron Barron and Gary Black. And also low-key aligns with Cathie Woods that this is an amazing company to buy. They might not be as bullish, but as long as it's an amazing company to buy. So I hope that you please look into Tesla, see its financials, and see the future and the growth of this company. It is an amazing company to buy, and right now it's just going through a rough patch, which is an amazing buying opportunity for investors. So I hope you like this video, and I shall see you in the next one. Bye!